Brien Lundin is the editor of the Gold Newsletter with uncanny accuracy. He covers the miners and the gold market. It's crazy good. He also produces once a year the oldest running investment conference in the United States, the New Orleans Investment Conference. Up to date, it's Brien Lundin. Well, folks, let's transition a bit and talk to a gentleman that knows a lot about one of the indicators of health in an economy and around the world, and that is our good friend Brien Lundin. Hi, Brien.
Hi, Robert. Great to be with you.
Well, it's always a pleasure, my friend. It's wonderful when we're able to get together in New Orleans. These days, we're all kind of sheltering in place, and this this whole crisis webinar is to give us a chance to pick the brains of some folks that see different perspective on what's happening. Obviously, anyone who's been paying attention at all has seen how the metals have responded since COVID-19. But we had, just no sign of this at the end of last year, and everything was trucking along. And then all of a sudden, coronavirus has changed everything. Give us the nickel tour on what it's looked like from the metals perspective.
Yeah, well, I was predicting that we were going to have something like this probably this year, because the markets periodically come back to the Fed and pitch a hissy fit and deliver an ultimatum to the Fed that we need easy money again, we need rate cuts. And the Fed had actually started that late August, and it had removed much of its tightening, much of the balance sheet runoff. So at some point this year, I expected the markets to come back and say, we need some more easy money. But I never expected it like this. Nobody really did. And the pandemic has created a situation where we not only advanced everything and brought it forward, but we accelerated the implementation of it. I expected everything that we're seeing right now, I expected it to come about over the next 3 to 5 years. Instead, it's come about in the span of almost 3 to 5 days. And that itself has repercussions. So it's been monetary stimulus, monetary easing, spending like we've never seen before. Everything that we saw post-2008, all of those new and crazy and now normalized policies that we saw post-2008, quantitative easing, zero interest rates, even negative interest rates, has been brought to bear immediately, and new and even crazier ideas are being proffered up. So it's become essentially a bidding war in Congress for how much more money they can bring to how much more stimulus they can bring. And the repercussions have been immediate, but they're also going to last for many years to come and really buoy gold and silver prices.
Well, let's talk about that part of it, because as we see money being printed, then we often talk about how gold's kind of a proxy for the dollar. If you pay attention to gold, you can see what's happening. It isn't always the case that markets work countercyclically, but it's been interesting this time around. Obviously, the stock market took a big hit. A lot of people flee to safety in the metals. It's not the only investor in metals, but talk about that part. You have been mentioning for a long time about the inevitable direction of the price of gold, not the value of gold, but the price of gold. And now it's happened, and it's happened quick. Along with that, there's been a tremendous demand for the physical product. So talk about how we see gold long term when it comes to more dollars being printed.
Yeah, if you look at the grand sweep of history, you realize that human nature has never really changed. In ancient Greece, ancient Rome, they had these same situations where governments overspent for whatever reasons, wars, entitlements, et cetera, but they created debts that were unmanageable, too large to pay off. So the prescription in every case has been to devalue the currency in which those debts are denominated. It's happened over and over again. It's happened in the US. It's happened with the dollar. And so the debts, my thesis, my long-term thesis has always been that the debts have grown so large that it's impossible, mathematically impossible to pay off those debts without devaluing the dollar to some extent. And so we know this is going to happen. It was accelerating in 2019 because we returned to trillion-dollar deficits, and this was really alarming at the time. But that just seems so 2019, because trillion-dollar deficits are now $3.5 trillion deficits and counting, and that's where the estimates are for 2020. And as I mentioned, they're just coming up with more and more spending programs. So The debt is truly, truly out of control at this point. That means that interest rates have to be ultra low. And on a real basis, adjusted for inflation, they absolutely have to be negative. You have to have negative real rates. Otherwise, the cost of servicing the federal debt would swamp the federal budget. And that is incredibly bullish for gold, silver, tangible assets, even real estate, and ironically, to some extent, even equities, at least in the short term. So, this kind of liquidity, these kinds of ultra easy interest rates, bode well for investments, at least in the near term, but over the longer term, they demand a steady and very significant depreciation in the value of the dollar.
Well, you wouldn't necessarily think you'd be talking to the editor of the Gold Newsletter about interest rates, but I know you have a lot to say about this at this year's New Orleans conference, or in 2019, you mentioned it. You and I were at a conference in Las Vegas where you were talking about kind of long-term, what has to happen in the interest rate market. And yet, I think nobody predicted the way that this would roll out. What do you think long-term for interest rates?
Well, again, they're going to be on a real basis negative. There's no way that the Fed can raise rates to any significant degree. Powell, as much as admitted that, they just released the Fed minutes moments ago as we're speaking, when he said they will keep rates low and near zero for as long as necessary. The fact remains that after 2008, when they thought they could normalize rates or try to normalize rates, the markets didn't let them. The markets have been addicted not just to easy money, but ever easier money. So they always want the Fed to be in a downward trend on interest rates and won't allow rates to rise to any extent. So the Fed post 2008 tried to pump up the financial markets, the equities, the bond market, real estate markets, home market, housing markets, and they succeeded. They really did through their decade-long policies of unprecedented easing. But they created a house of cards in many extent, to a great extent. They created the wealth effect that they sought, but it's entirely dependent upon easy money. So there's really no way the Fed can ever return not just to a normal interest rate policy where we are thinking about the natural rate of interest of say 5 or 6%, but they can't even get to positive rates on a real basis, in my opinion.
Now, Brien, of course, with real estate investors as our primary audience, the fact that we all expect interest rates to remain low is probably a good thing. But one of the places that people have historically gone when they're worried about the basis of the financial system, the house of cards, you talked about this at the Future in Money and Wealth, and that is real assets and gold and silver. Not only have they historically been money for thousands and thousands of years, but even now, when things get rough, when there's rough spots in the news, people flee to the metals.
Yeah, they do, because gold is the natural counterweight to whatever the currency du jour is and the depreciation of that currency. And it's going to happen again. I recommend that people start off at the very least building a foundation of physical metals because it's insurance for everything else you've earned in your lifetime, your wealth. And it's insurance. If you look at it this way, you buy fire insurance for your home, but you don't really expect your home to catch on fire. Yet every month you pay that insurance statement, that insurance bill, and you keep your house insured. To insure your wealth in gold and silver, you're insuring against something that you know is going to happen, an inevitability that the dollar is going to be depreciated over the long term. And you only have to pay that premium once. You can always build on your insurance level, but you only have to really pay that premium once. And again, you're insuring against something you know that's going to happen. It's vitally important that people maintain a foundation for their investment portfolio that's based in physical metals, gold and silver primarily.
Oh, it's a great analogy. And I think we're the real estate guys. We love real estate. But for years, we've been talking about the broader economic picture, other assets, other hard and real assets. Big fans of gold and silver for that reason. But as you mentioned, you start with maybe a position of some physical metals. But one of the things that you certainly pay attention to is there's a lot of different ways to invest in gold. And our purpose of this webinar isn't to really do a primer on that. We've got some great resources from you, from your friend Daniel Samuelson on our website. But just for people to understand, in addition to owning physical metal in your hands, what are some of the other ways people do invest, and how does that affect the price of the metals?
Yeah, it can get really complicated, and a lot of people are intimidated by the vast array of ways to get involved in the metals, and so we do try to simplify that. Again, the initial thing you need to do is invest in physical metals, build that portfolio, that foundation. After that, you can look at ways to leverage macro move in gold that we all feel confident in, that gold prices are going to rise because we have these easy money forever policies. So if you believe in that, then there are ways to leverage the move higher in gold. One of the primary ways is silver. Silver offers natural leverage to gold. It tends to move more than gold. You can get into the mining stocks, which tend to dramatically outperform the metals themselves. If you're getting into mining stocks, you can get in. You can simply buy the GDX or GDXJ ETFs and call it done. Or if you'd like to do some research, you can go to conferences, subscribe to newsletters, and try to pick individual stocks, even the junior stocks, that can dramatically, even more dramatically, outperform the metals. Then there are futures and options. There's paper representations that can be stored offshore. There's just a wide array in each sector, each individual sector of the precious metals market. There are even more options. So it can get complicated. The important thing is to educate yourself, build that physical foundation initially, but then educate yourself on these other areas before you kind of dive into them, because they do carry attendant risk, higher risk than just the physical metals themselves.
Well, and I always appreciate in Gold Newsletter how you're able to bring up kind of the current state of affairs, what's happening. You'll often make a prediction, and it is uncanny how often it's true. So now you have your head around this space. Let's talk about this angle, which I haven't heard anyone talking about. We've got record unemployment. Fewer people have jobs, therefore fewer people have discretionary income to do things like invest. We've seen how that's affected home prices. And yet, what about gold and silver? Is it just the gold bugs, just the people that have been in it trying to, shore up their positions? What about new investors? Is this a time for someone to consider that? Or do you think the fact that there's so much unemployment is going to affect the metals market?
Well, the fact that there's so much unemployment means that, there's an economic slowdown, which means the policy response is going to be, as it has been, dramatic. And as long as we have a slower economy, the policy response is going to continue and to continue to build on itself. So that's the driver behind higher gold and silver prices. And what happens is, and it's really kind of aggravating for us gold bugs that are riding this market up and down and watching it every day, is the generalists, the mainstream investors, all of a sudden hear it mentioned on CNBC, or they see this trend, and then they come in. And they enjoy really, really good gains, even if they're not in there right at the very lowest levels. But that's what happens to really drive the market, because it's a small market. Gold and silver are so much smaller than the equity markets, the bond market, the currency markets in particular. And my friend Doug Casey has popularized the saying that when these generous investors find gold and silver and try to get into these much smaller markets, it's going to be akin to trying to force the contents of the Hoover Dam through a garden hose. It's just that dramatic. So prices, even at these levels, and a lot of these mining stocks have already moved very significantly, but we're still in the early stages of this. And we're seeing that the generalist investors are starting to move in, starting to shift allocations into this relatively small sector. And that's going to power these markets over months and years to heights that would seem really fantastic at this level.
It's not that different from real estate. When a market gets a buzz, when it gets strong, and all of a sudden there's performance and word gets out, then more dollars chase that. In real estate, that drives down the return, because the capitalization rate, the return on dollars invested, comes down as more money chases deals and raises the price without a corresponding raise in income. Obviously, the metals don't produce income. It's one of the so-called negatives people have about gold and silver. Well, it doesn't pay me a dividend. But as you pointed out, if you think more about it in terms of insurance, that's a different mindset. It's a preservation of capital. It's not the fact that gold and silver change value as much as it is that the underlying currency does. And that's a point I wanted to bring up because people may not realize it. We watch the gold price as US citizens in dollars. Here's how many dollars it takes to buy an ounce of gold today. But in almost every currency in the world right now, gold is at an all-time high. It's not at an all-time high in US dollars because compared to the other fiat currencies, the dollar is quote unquote strong, but that also skews our perspective as US citizens and people that hold their wealth in dollars to think that maybe gold isn't performing, so to speak. Can you speak to that angle?
Yes, the dollar is the one currency in which gold has not reached record heights, as you mentioned, and that's partly because the dollar is in itself a safe haven, and people feel that a lot of people feel that the dollar has to crash for gold to rise, and that's not so. Over short periods, to be sure, and even over some even more intermediate periods, they can both rise if there is a safe haven aspect to the demand for those metals. You know, history is famously said, doesn't always repeat, but it certainly rhymes. And in the early 2000s, from around 1999 to 2001, depending on where you mark the start of the last big bull market in gold, gold went from $250 to $1,920, and went 7-8 times over in price over the span of 10 or 11 years. And tremendous profits were made for people who not only held gold, but who held the derivative investments like mining stocks and the like, especially the juniors. That market started off with gold rising in dollars only and not the rest of the world's currencies. So it's similar in that we had a long-term trend, like I believe we have now, but it started in a different way. Now we have only the dollar to knock off before everyone realizes that this is a new long-term trend. And I think it's going to happen. As strong as the dollar has supposedly been, it has not been able to maintain any upward momentum. And in fact, it's been trading back and forth in a very volatile fashion. So I think we're going to get to those new heights. So we're going to have to get to over $1,900 in dollar terms, gold price over $1,900. Heck, we could do that before the end of this year, the way gold is going right now. So it's going to happen, and I think that alone will bring in a lot of generalist investors and an awful lot of new money into the sector.
Well, it's such an interesting point, this idea of when the generalists get in, because again, the parallel to real estate is certain investors start in the market and maybe build up and test those levels and make sure that there's going to be a viability. And then once it's proven, people do jump in. And we've seen that happen. The size of your conference, Brien, has changed depending on the price of gold.
Yes, it's always been an indicator of how that market is. And of course, not that perfect of an indicator, because since we started getting involved with you guys about 6 or 7 years ago, you brought a new influx of real estate investors to our event and a younger crowd. So I can't thank you enough for that. But that was great during a long gold bear market that we were able to bring in some new blood. And now they're reaping the benefits of that as gold is taking off. But yeah, that's been an indicator, and we expect a big crowd this year. Despite everything that's going on in the world, we expect a big crowd here because there's no better place to be. And history has proven that this over decades, that there's no better place to be than our event, the New Orleans Investment Conference, in uncertain times in a gold and silver bull market. The kinds of investments you can find, the kind of insights you can get at this event really are not available anywhere else.
Totally agree with that. That's why we never miss it. That's an awesome event, and certainly we'll plan to be there this year in hopes that we'll all be able to get together, because I'm not sure it's going to be as great without the fabulous food in New Orleans if we had to go virtual or something, but we'll hope by then we'll all be able to get together.
Hey, Brien, I got a quick question for you, or a couple of quick questions. As you know, I've been monitoring gold for quite a while, and I do it primarily as a indicator of the direction and the relative strength of the dollar. And so I'd like to hear your thoughts on that in terms of how you see what is gold saying about the dollar right now?
Well, it's saying it's better than the dollar. And, everybody's talking about dollar strength. And you're one of the most eloquent speakers on this topic that I've ever run across, Russ, and really put it in such a clear fashion for investors. So I'll try to essentially parrot back some of the things you've been saying in recent years. But people say the dollar has been strong, but they're looking at the dollar in relation to other currencies, other fiat currencies. And if you look at fiat currencies in general, every developed nation, every developed economy is in the same boat as the U.S. They've created debt loads that are unmanageable, so they all have to do the same thing. They all have to depreciate their currencies. But every currency is racing to the bottom of the hill, and occasionally one might lead, one might lag behind, but they're all racing to the bottom of the hill. They're all being depreciated. Then what are they depreciating against if they can't depreciate against each other? Well, obviously gold. And what we're seeing now is that gold has not, well, obviously it has not reached a new record high in terms of the dollar, but it's appreciating in terms of the dollar. So it is trouncing the dollar right now. It is outperforming the dollar and really performing its role in this kind of a situation. So gold may not tell us that the dollar is stronger or weaker than other currencies, but it does tell us whether the dollar is weaker than the ultimate money, gold. And that's precisely what it's saying right now. And silver as well, I might add, because silver has just begun over the past week or so to start to outperform gold as we would expect.
Yeah, I mean, we could do a whole deep dive into the gold silver ratio and all
Yeah.
of that. But I have a second thing, because like us, you get a chance to hang around with some super smart people.
Mhm.
You know and converse with a lot of smart people that Robert and I aren't as close to yet, but thanks to you, we're meeting some of those people. And one of the things, and I've been talking about this when we come out to the New Orleans Investment Conference, that it has had me concerned for the last 7 years is China's desire to upend the dollar as the reserve currency of the world. And I think that, because of China's communist government, and I think now, especially in the wake of this COVID-19 and the way that was handled, and a lot of the animus against China because of that, I think that using gold would probably be the only real way they could pull that off. And I'm wondering if you have an opinion on that in terms of is China in a position, do you think, to make a real run at putting their currency out there and backing it with the strength of their manufacturing economy, the strength of their population, and more importantly, with a cachet of gold? It could be a whole lot bigger than some people think. Is there any word in the street that you're hearing that you think would either confirm or refute that?
Yeah, there is. Or some very smart people that I follow and know have been tracking China's gold purchases for a long time. And there has been a veritable river of gold going from Western vaults to Eastern vaults, primarily China, over the last decade and primarily since 2013. It's been easy to track. Now, China reports official gold reserves, and periodically, it's interesting when they report and when they don't. But they report official gold reserves of around 1,800 tons. Most people feel that's probably more like 4,500 tons, give or take 500 tons, but it's much larger than what they're reporting. So they've got this hidden weapon that they've been holding in abeyance. That they could spring at some time. We don't know what the exact strategy is, but it's probably along the lines of what you're talking about. In addition, they've been encouraging domestic gold purchases among its citizens. And in a truly communist country where private property at base is not allowed, is illegal, and everything belongs to everybody, then it's easy for the Chinese government to regard gold in the hands of its citizens as essentially national reserves. And that number is, again, or apparently a vast multiple of even its official reserves. So there's an awful lot of gold in China that is in the control of the Chinese government. And it is an obvious and overt policy that they've had in place for a very long time, or a considerable amount of time. When that comes into play, we don't know, but Russia's been doing the same thing. And these are not friends of the United States, long-term friends. It will be interesting to see how it all plays out with this anti-China sentiment because of the COVID pandemic and other issues. We already had the trade issues. So that's going to be very interesting to watch whether China tries to repair relations with the rest of the world or whether it pulls out one or more of its secret weapons.
Yeah.
All right, good stuff. Hey, the New Orleans Investment Conference happens in October 2020. For all the details and a special invitation to the Real Estate Guys Suite Party, just send an email to neworleans@realestateguysradio.com and you'll get all the details. It's going to be a great year at the conference. Brien, anything you can share with us in terms of maybe who's coming or topics or any of that?
Well, we're looking right now, we're negotiating with the hotel, and you can understand this, on what our obligations are, et cetera. So we're looking at really two tracks, really a live with the event with a virtual component or a fully virtual component. And within the next few weeks, we'll know that. We'll be able to make that announcement. But I think to sum it up, everybody's coming to New Orleans. We're going to be able to get all of the top experts once again. And we will finalize that roster once we know which way we're going, whether it's live or completely virtual.
Hey, if you're interested in learning more about the metals and really staying up to date with what's happening, I can't think of a better resource than your gold newsletter, which is masterfully written and amazingly accurate. And Brien has a special for Real Estate Guys listeners, which is kind of cool. Brien, tell us about the newsletter and all of that.
Well, we're in our 50th year with Gold Newsletter. It was, of course, started by Jim Blanchard. I didn't start that when I was a youngster, and just continuing that long legacy. But it is the oldest, and I would venture to say most respected advisory on precious metals, mining stocks, and the like. It's also one of the most affordable newsletters out there because we like to get a big family of subscribers in there and then bring them down to our conference. So you have an opportunity as a Real Estate Guys listener to go to goldnewsletter.com/REG and get either a sample issue of Gold Newsletter at a very low price, our current issue, or subscribe at half price. And this is something we'd love to offer your listeners because they're all really great people and smart too, as they demonstrate by listening to your show.
Well, thanks so much for that. And of course, we appreciate having you as part of our faculty on our Investor Summit. We'll have an update on that before we're done. Hey, Brien, thanks so much for your input today. We'll have you back for our final panel today, but we sure appreciate, as always, your time, your attention, and your great wisdom. Thanks for being here.
Always, always a pleasure, guys. Thanks.
Well, it is always great to hear from our good friend Brien Lundin. We're just really, really happy to be in a relationship with Brien where we can pick up the phone, call him, find out what's on his mind. We also subscribe to his newsletter, which we would certainly suggest because he gives you great insight. And as you said at the beginning, Russ, in many ways, gold is kind of a canary in the coal mine.
Yeah, it absolutely is, and Brien and I have these friendly discussions from time to time because he gets excited when gold goes up in dollar terms. I get excited when gold goes down in dollar terms,
Right.
because when your dollar is stronger, meaning it buys more gold and gold is cheaper, you can accumulate more gold. But be that as it may, at the end of the day, gold is a very important part of the global financial system. Central banks have loaded up on it, and individuals who are concerned about what's happening in this crisis and have been concerned about what's happening in the overall financial system for quite some time have been loading up on it. And yet so many people don't have it in their portfolio. They don't understand the role it plays in their portfolio, and they certainly don't understand how it is really an indicator of what is happening or what is coming with respect to currency and the potential for a currency collapse, which is, the end game of this entire COVID-19 crisis. If things can't get started again, and we end up in a situation where the only answer is to print more and more and more and more money, And especially if the United States were to lose the ability to be the world's reserve currency, now you're looking at a situation where the U.S. loses that exorbitant privilege and the ability to just print a lot of money at will. And then it's more like Zimbabwe or Venezuela or some of these other horror stories, Argentina, where the currency fails and people need to have another alternative. Often it's been the dollar, but what happens when the dollar fails? Well, that's where gold comes in.
And we will hear more from Brien as he weighs in later, but always good to see what's on his mind. The great thing about understanding all the different real assets, if you will, is that it just makes you a better investor. So if you're, a real estate guy's listener, and primarily real estate is your thing, like it is ours, make sure you're opening your mind to consider the different types of hard assets there are. Great to hear from Brien Lundin on precious metals. Next, we're going to talk about oil, and Art Berman is going to do his best to convince you that energy is oil and oil is the economy, and it will open your mind for sure. Up next, Mr. Art Berman.
Hey everyone, thanks for watching. Before you go, 3 things. Number 1, click the subscribe button, because when we have more subscribers, it makes it easier for us to attract better guests to share great content with you. Number 2 is click the notification bell to be sure that you're notified when we put up new content. This is obviously an ongoing situation. We're going to have continuous discussions about it. You're going to want to make sure that you're kept up to date. And then number 3 is make sure you share it. Tell a friend. Help us flatten the economic curve by getting more financial education out there to people who need it. Okay, so you know what to do. Click the subscribe button, click the notification bell, and we'll see you in the next video.
Systems break, and suddenly your family, friends, and neighbors are distracted with Wall Street stock indexes and Washington political pandering. Many are unaware and unprepared. Like COVID-19, ignorance of looming financial perils is also a disease, and the system is fragile. But you can help. Financial education is the vaccine. Share this free video series while there's still time. Alert people to these serious issues. If things turn quickly, the financial support system could be overwhelmed to the point of collapse. Help flatten the curve and reduce the impact on the financial system. Wake up more people to prepare. You have nothing to lose and a lot to gain. Share this video directly or invite people to visit crisisinvestingseries.com.